Joining me now is Traderade co-founder Ayesha Tariq. And Ayesha, last week saw the biggest weekly everything rally. Everything was up, for bonds, stocks, high yield, everything was higher. So we know there was a sigh of relief, but also could it be the beginning of something bigger?
Hi, Charles. Thank you for having me back. It was an everything rally, and we can now pack up and go home for the year, right? No need to stay. But on a more serious note, I think we could still see a little bit of continuation of this rally into the end of the year, driven a little bit by, that pullback in rates that we're seeing right now. But that could also bring some perils with it. So I saw the chart that, Lydia showed a little while ago. But, these figures don't really take into account that the Fed funds rate is still above 5% and will likely remain so for, next year as well.
Right.
And so right now it's more like a balancing act between, growth, a slowdown in growth, and, rates coming down a little bit. And we can't have above trend growth without inflation. So that's something to keep an eye on.
So, and I saw earlier you had tweeted, cautioning folks not to get too far ahead and start talking about rate cuts just yet.
Oh, absolutely. So I think a big problem with us is we're always looking for that rate cut. We're always looking for the Fed to come and step in. But something that we don't consider is the Fed has never had to, or at least in the last 30 years, the Fed hasn't had to contend with inflation at this level, right? So things are a little bit more different right now. And, the primary objective is to bring inflation down. So that's something that we need to remember. And the Fed will likely do anything needed to, achieve that target.
Let's talk about investing ideas, because you were with us a few weeks ago. You had a couple ideas that have been sizzling: Cardinal Health, General Dynamics. Are you still holding? Is it too late to buy those?
So I don't think it's too late to buy those. I know Cardinal Health gapped up quite a bit on earnings, but I think they've gapped up because they've made a turnaround over here. So they're one of the biggest distributors of pharmaceuticals and medical products in the US. And they had a really hard time because of inflation and the pandemic, but they're turning things around, led by pharma growth. And part of that growth is also the GLP-1 and vaccines. So I think they still have a runway to growth here. We see another $10 to $12 from here, actually. So that's quite a good level, right?
Right. Hey, before I let you go, because I was going to ask you about Zscaler and CVX. They moved higher, they're sort of sideways. But what are you looking at now? Anything new on the potential buy list, or have you bought anything new since last I saw you?
So I guess we have like 4 or 5 names here: Cardinal Health, CVX, Zscaler, and Arch Capital. So we do like insurance here quite a lot, especially insurance companies that have exposure to property casualty and reinsurance.
All right. Ayesha, great stuff. Thank you very much. Always appreciate it.
Thank you.